What's up, everyone? It's Karthik with Moneyvest. So, a very important market update as this sell-off continues. I will be posting a private members-only video later this week going over my 30 stock shopping list with all the high-quality businesses, including our intrinsic value on those companies. So as the prices are coming down, we've got a very good idea on where I'm going to be doing my light, heavy buys, aggressive buying opportunities, and of course, no-brainer buy targets as well. So that's going to be a list of 30 stocks with my entire buy price, heavy buy price, and no-brainer buy targets on that list as well. But this right here, it's going to be a bit of an update on where we are with this entire sell-off. The tech stocks essentially dropped over $1.1 trillion in 5 days. We've seen one of the largest market cap losses for these Magnificent Seven companies on record. So tech sell-off erases $1.1 trillion of Magnificent Seven market cap in 5 days. As investors rotate out of large technology stocks, the Magnificent Seven has seen one of its largest 5-day market capitalization wipeouts on record. And I believe that this is going to continue in terms of not the sell-off, but the records that we continue to create. And the reason being is because these companies are getting bigger and bigger and bigger, right? So you've got over 33% concentration for these companies in the S&P 500. So if I bring over my spreadsheet where we calculated the market concentration, so this right here is where we are. You'll notice the big three, which is your Nvidia, Microsoft, and Apple, are accounting for over 20%, now under 20% as these numbers are just updated. 20% of, a little bit over 19% to be precise, of the S&P 500. So that's less than 1% of the S&P concentrated into three companies. And that's almost 20%, a fifth of the S&P 500. If you take a look at the Magnificent Seven, this number was almost as much as 33% at one point. Now it's come down to 32% as the sell-off has continued, and we've got 1.4%, and the Magnificent Seven is now worth over 15.4 trillion across the board for all these companies, right? So Nvidia, you got Microsoft, you got Apple, still the most valuable company at 3.3 trillion, Microsoft at 3.1, Nvidia at 2.8. Tesla has been selling off quite aggressively, so it's now under 700 billion. We got Alphabet at 2.2 trillion, Meta 1.1, Amazon just under 2 trillion, and of course we got Eli Lilly, Berkshire Hathaway, and Broadcom as well. But the bottom line is that these companies, of course, the fact that they're so big, there's obviously going to be record selling pressure as they continue to sell off. So even a few percentage points drop in these companies is going to result in trillions leaving these companies for other parts of the market. So in my opinion, that of course is a huge deal. That is, in my opinion, going to continue. But I really want to pick a few pages from Peter Lynch's investing books and really kind of help you understand why it is important to keep your ground, be more steady and stable, and of course keep your emotions out of when it comes to investing, because that's how it works, right? Markets work in cycles. We've talked about this, and even Howard Marks, one of my mentors when it comes to understanding long-term investing psychology, has written extensively on this topic in one of the best finance and investing books, which I highly recommend to everyone, and that is The Most Important Thing. I've talked about this and I've done a detailed video on this very book on our Moneyvest Reads channel, which I think is very useful, and you're more than welcome to check it out. But he really talks about how market psychology works in a pendulum, right? We go from one end to the other end. We go from extremes, one extreme to the other extreme. We go from overbought and overextended and euphoria to oversold and fear and pain, right? That's how the market pendulum keeps on swinging. And he also talks about how everyone, right, all of us can invest when things are going well, right? All of us can invest when things are working just fine. Markets are hitting new all-time highs. It's an easy decision for most people to invest when markets are moving higher because prices keep going up. Everyone's having a good time, and we just feel better, right? Because we see green every day. We see our portfolio going up. So everyone can invest when times are easy, when things are going well. But successful investors, and that's again what he mentioned in the book, they do things that are difficult to do, right? Successful investors are all about doing the irrational thing or doing the logical thing and keeping emotions aside. They don't operate on emotions. They don't invest with the crowd, except they have a contrarian view. And when the markets are indeed trading at, let's say, overbought or overextended levels, they take a step back, they observe things from a more rational, more logical standpoint, and again, conclude that, okay, if the risk reward is not that great, I'm better off just holding back a little bit, right? Because of the patience that we have, right? That's why Warren Buffett also says that the markets are just a tool of transferring wealth from the impatient to the patient. So people who are impatient want instant gratification, instant profits, and want to chase the stock higher and higher as it continues to get bid up are eventually going to be holding the bag, versus people who are patient enough to wait, let the prices come to us. And that's really been the psychology, the philosophy of our channel, is to allow for prices to come to us. And I often get mistaken in my previous videos, as somebody who is a bear, right? Somebody who is constantly talking about a market pullback or a correction or a recession or something like that. But I want to be very clear. When times are good, I really want you to take advantage of those opportunities. Like right now, when prices are coming down, I would come out here publicly, and even in our Discord, I'll tell everyone, look, guys, buying window is opening up. There is opportunity. Take advantage. Versus when the opposite happens, right? When markets are trading at all-time highs, the risk reward are not that great. That's when also I'll tell you, I'll point it out, and look, risk reward's not that great. Markets overbought. A lot of Magnificent Seven trading companies are trading at pretty much overextended levels. So just be careful. Not necessarily that it's a sell signal. Just be careful. That's what I would say. And again, Peter Lynch has also mentioned in his books and in several videos that there will always be something to worry about when it comes to the stock market. Everyone has the brain power to invest in stocks and to analyze companies, right? So everyone can learn about fundamental analysis, technical analysis, charting, and how to analyze companies, can use a lot of platforms, a lot of software out there to analyze companies. But the real difference maker is what Peter Lynch says is, and the most important organ in your body for investing in the markets is your stomach. Can you stomach the losses? Can you stomach the volatility? Can you stomach the red days? And that is the real difference maker, because that is not something that you can learn. It's something that you experience over time. And it's always interesting, right? So in the moment, we often forget how far we've come. We often forget like where we were, let's say 3 years ago or 5 years ago. Because just to give you a bit of an example, and we'll go over to the technicals and market positioning as well, but I think it's really important to understand the psychology behind investing as well, so that it helps you also understand that we're in the same boat. All of us are in the same boat. I'm in the same boat as you. Markets are selling off. I'm also feeling the pain. But the way I kind of look at things is, where was I, let's say 3 years ago or 5 years ago? Because I showed you guys my daily loss, right down over $22,000, which is pretty significant. And if you put things in perspective, let's say 5 years ago when I was back in school, that was my entire semester's college tuition, right? Gone in just one day. Unrealized, but it's still an unrealized loss. That's my entire semester's tuition. That was my entire 1 year's worth of rent in New York when I was living there, right? Entire 1 year's worth of rent gone in just one day when I was back in living in New York. That could also be a 5 to 10% down payment on a house, or it could be used to buy a used car for transportation. So there's a lot of different ways that you can utilize that entire amount, right? Which of course I lost in a single day. And again, I was going through the comments on our Discord and on our YouTube. People have lost, of course, on an unrealized basis, significantly more, right? 50, 60, 70, $80,000. Some people in the six figures. But that's how you level up. That's how exactly you level up in investing over the years. And I think it's really important to understand that you just don't level up financially, but you also level up mentally. You also level up here up here in your mind, because that's how most lottery winners go broke, because they are financially rich, but they're mentally broke, right? So eventually they run out of money. But in order to have a long-term successful, financial fulfilling life, you not only are growing financially, but you're also growing mentally to be able to handle the levels of stress and volatility that comes with investing in the markets, because there will always be risk. It's just how you manage and cope with that risk is how you level up. And I'm sure if you're watching this video, you've been investing for more than 2 to 3 years or 4 years or 5 years, you're in a much better spot than where you were 5 years ago. And what you have now is what your dream was 5 years ago or 7 years ago. So I think it's really important to, of course, understand that market volatility will always be there. But at the end of the day, I'm still grateful for where I'm at and where I'm headed. Trusting the process and staying true to the entire process is, I think, really, really important. And I think it's very underappreciated. So coming back over to this, this right here are some of the updates that I shared with everyone, in our Discord. Mention, let the prices come to you. I can't emphasize this enough. The buying window is opening up and the opportunities are coming your way. Wait patiently and take advantage. NASDAQ is in a pullback now. So again, we talked about the market thresholds, and the S&P is still in a dip. I believe that's going to turn into a pullback by the end of this week, or most likely next week. NASDAQ's in a full-blown pullback as it's down a little bit over 7%. And the S&P 500, of course, also coming down to some very important support levels. These are the two support levels that we need to watch: 52.60. It's going to put us down over 7% from all-time highs. And the second support, which is going to be a bit of a correction, is going to be under 5,000. And that's going to be down over 12.5%. The MoneyVest index, as of that time of the video, or the update, was 3.67. It came down to 3.57 a few hours later. And I mentioned that it's approaching that 3.5 level soon. We will dip into the yellow zone, as mentioned in this chart. So there's different zones. There's 6 bands that we have here. Actually, 7 bands. 3 to the upside, 3 to the downside, and 1 in a neutral zone. So we got the deep red, somewhat lighter red, and then just a regular red. Then we've got the yellow zone. Then we've got some light green, some darker green, and some deep green for when the opportunities are there. And this is simply a risk-reward tool. Again, I want to emphasize, it's not telling you where the market tops or the bottoms are. It's not telling you where to exactly time the market. It's not telling you where to buy, where to sell. It's simply telling you how markets are positioned technically and how good or bad the risk-reward is. In other words, how favorable or unfavorable the risk-reward is. And guess what? After markets closed today, we dipped into 3.5 exactly. In fact, we were at 3.48. So we are now in the yellow zone. We're kind of like in the neutral zone. And the last time we actually came down to this level was around April of 2024, which was also a pretty good buying opportunity for the market. So you can see that we're just starting to dip below that yellow zone here. And the last time we were actually lower, down to low 3s, was back in April of 2024, more precisely April 18th, April 20th, and that's where the buying opportunity was for the markets. And again, since then, the markets have ripped under 14-15%, although they are now starting to come down. So really keep a close eye on some of these levels. I think it's going to be really exciting for us to, once again, dollar cost average and deploy a little bit more cash back into the market. My covered calls, again, lucked out on Tesla because I was able to close about 300 shares of Tesla, free up a lot of capital because those calls expired in the money, and Tesla was in the 250s up until a few days ago. And I was able to lock in a lot of profit on those and then free up capital. And now as the markets are coming down, I can utilize that to once again be a little bit more aggressive buying back into the market. So keep a close eye on this. I think it's really important as volatility continues to go up here, up another 1.4% as markets just opened here for the VIX at just over 18. So I will start buying starting tomorrow. And then I'll keep you guys updated with where we are with the MoneyVest index, and of course also talking about how good or bad the favorable or unfavorable the market opportunities are moving forward. So hope you all enjoyed this video, and a little bit of a message to all of you as well. Again, it's very normal. Don't be afraid. This is part of the market. For all new investors, I can understand the panic or the psychology behind investing, but take it from us and our community. We've got lots of investors who have a lot of experience, global investors from all over the world that have years of experience investing in the markets, and they'll tell you just relax. It's all part of the game. It's all trusting the process over longer time frames. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Again, if you want to get access to all the trade alerts, my entire shopping list, which I'll be sharing with everyone later this week, link's going to be down below. I'd love to have you on board, and happy investing, and I'll see you all in the next video.